Nasdaq's been stronger than Bitcoin. What gives? Aren't they supposed to be all driven by the same liquidity factor? Why is the Nasdaq diverging? Why is Bitcoin diverging from 2020? Why is it diverging here? Why is it diverging here? And the answer is, you haven't heard this from anybody yet, but this is, I talked to you last month in the Drinks with Raoul that the thing that is happening is the Fed were tightening because the Treasury General Account was being built ahead of the government shutdown. The Treasury General Account got built. Meanwhile, the reverse repo got drained to zero. So there's one lever. If they don't use the balance sheet, there's one lever left for the Treasury and the Fed to use in driving liquidity currently. And that is the Treasury General Account. That's the checking account of the Fed. And so they've been building it up, putting some cash in the system ready for this moment. And what they then do is they will then release it by spending that money. But there's an issue with spending that money. There's a government shutdown. There's nothing to spend it on.
Raoul Pal believes the recent divergence between Bitcoin and the Nasdaq isn't a collapse but a brief liquidity pause. The Fed's tightening and the Treasury's halt in spending due to the government shutdown temporarily slowed money flow, putting pressure on risk assets like crypto. He says once fiscal spending restarts, liquidity will return, and assets such as Bitcoin will recover quickly, just as seen in past cycles. This pause, in Pal's view, is simply the market catching its breath before the next move. Pal predicts the coming phase could spark a historic crypto rally, potentially pushing total market value toward $10 trillion. As global liquidity expands and institutions re-enter, he expects Bitcoin and digital assets to lead the next major wave of growth.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So financial conditions and gold are all in the future. Interestingly, gold actually follows, or actually is, basically current financial conditions. And so when you look at gold against total liquidity, it's telling you liquidity is about to explode. And that's a really interesting thing. Gold has shifted around. Sometimes it's real rates, and other times it's other things. Other times it's just the dollar. But right now, gold's highest correlation in this kind of Bayesian world where probabilities shift and correlations shift is it's all about financial conditions. And it's basically telling us the financial conditions here are going to explode weaker. Okay, super interesting. Will it work out exactly like this? Hell no. Will it be rhyming? Hell yes. So liquidity is rising. Okay, so what's really going to push a massive rise in liquidity? Well, hello, the PBOC. We've been using this chart of the Chinese central bank balance sheet, which is the only major government using their balance sheet right now, versus 10-year bond yields with like a 2-year lead. And it's been working perfectly since we started pulling this out in 2022. And what it's suggesting is we're now in the acceleration of the use of the PBOC balance sheet. Balance sheets are like the most powerful force multiplier. Somebody's going to be using one somewhere. Back in 2017, it was the Chinese that drove the entire crypto cycle because the US was tightening rates, and it was doing QT. I mean, all of the bad things, all overridden by the fact that the PBOC, the UK and the ECB all stepped on the gas. The PBOC is going to be stepping on the gas. Interesting. Look when it peaks in 2026. That's super interesting. We also know that gold leads by a significant period of time, about 12 months versus ISM. And that's telling us that, in 12 months' time, we're still not peaking the business cycle. Has gold peaked today or not? I'm not sure. I still kind of think it goes another leg from here, but we have some more volatility, more correction, another leg higher. I'm indifferent to it. I'm not in the gold trade right now. What it does is give us a lead on the cycle. So go back to the gold chart. This is the chart that everyone on Twitter has got a different time horizon for. This is the one we've been using. I've not really shared it super publicly, but this is gold with a 188-day lead, so 6 months lead versus Bitcoin. It's a stunner, right? It's an absolute stunner. So As of tomorrow, every single fucker on X is going to be using this chart and claiming it's theirs. If you would just remember, now the problem with this one, it's not the pink GMI one. So if you see this, just make sure that it's our chart, because I've not seen this one. Everyone's using like a 90-day one or a 60-day one. This is the one, I think. What we've got is a slight divergence against, I don't think you can see my mouse, but there's a slight divergence versus that chart. And that doesn't look anything on the chart. I mean, it's noisy, right? Nothing fits perfectly. Keep trying to say this 1,000 times, and everyone goes, oh, why did that chart break? It's like, morons, please listen. You're not serious people. So what it suggests to me is we have catch up to do, and that goes into the end of the year. And then we'd have a period where everyone says the cycle is over, and what happens is nothing. The bears get really aggressive and it doesn't work. The bulls get miserable and start questioning their own lives, and nothing happens. And then eventually, April, May, as ever, it explodes higher again. That's what this is telling you. I think this is probably the closest estimation in my head and what I think plays out. Let's go to April 17 to 18. There's a similar pattern here, similar kind of part in the cycle. Obviously, we think the cycle extends, but there is similarities, and we've got alligator jaws. Oh no, alligator jaws. What normally the alligator jaws will do is Bitcoin should be at about 140,000 now, but it's not. So it's diverged a bit. Oh, it's all broken, it's failed. No, I'll explain why. Because there's always reasons why things are different. Here's Bitcoin 2020 versus 2021. This seems like it's the right point in the cycle versus the previous chart, which was the final year of the cycle. This is the prior year of the cycle. And what we've got is this divergence again. I mean, look how beautifully tight that correlation is. Alligator jaws. Oh, well, it's all broken down, Raoul. This is all worthless. Spurious correlation, blah, 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 blah. Sort of. NASDAQ versus Bitcoin. NASDAQ's been doing great. I've seen all of you kind of paper-handed ninnies all going, well, I'm just going to trade tech stocks now. And what's hilarious is the amount of people from crypto have gone, well, it's gold. I'm going to buy gold instead.
Raoul Pal says Bitcoin's recent slowdown isn't a collapse but a brief liquidity pause caused by Fed tightening and halted government spending. Once liquidity returns, he expects Bitcoin to rebound quickly, following past cycle patterns. He believes this pause is setting the stage for a massive rally, with global liquidity and institutional inflows potentially driving crypto's total market value toward $10 trillion.
It's all the same trade, leads and lags, but everything divided by Bitcoin is down 99.9% over time. Just remember that when you're switching around. Tech stocks, I love, great opportunities. NASDAQ's been stronger than Bitcoin. What gives? Aren't they supposed to be all driven by the same liquidity factor? Well, what gives is, well, here's the liquidity factor, global M2 and NASDAQ. I'd rather use total global liquidity, but this is a weekly chart, so it makes it easier. Basically, 97.5% of all of NASDAQ is explained by the one variable, the most powerful macro variable on Earth, liquidity. And this is a proxy for total global liquidity. In Bitcoin, it's 90%. But occasionally, look at this in the NASDAQ. Do you remember when we came out and said, you need to buy the NASDAQ, it's well overshot versus liquidity? Guess what happened? The alligator jaws shut. We saw the alligator jaws the opposite way around here. It works because it's 97% of everything that happens to the NASDAQ is the one variable. So why is this going on right now? Why is the NASDAQ diverging? Why is Bitcoin diverging from 2020? Why is it diverging here? Why is it diverging here? And the answer is, you haven't heard this from anybody yet, but this is, I talked to you last month in the Drinks with Raoul that the thing that is happening is the Fed were tightening because the Treasury General account was being built ahead of the government shutdown. The Treasury General account got built. Meanwhile, the reverse repo got drained to zero. So there's one lever. If they don't use the balance sheet, there's one lever left for the Treasury and the Fed to use in driving liquidity currently. And that is the Treasury General Account. That's the checking account of the Fed. And so they've been building it up, putting some cash in the system ready for this moment. And what they then do is they will then release it by spending that money. But there's an issue with spending that money. There's a government shutdown. There's nothing to spend it on. So what we've got is this period since kind of end of September, October, when, guess what, crypto started underperforming, where liquidity has stopped at the lows. And this is the lows going back several years. And that's normally driven by the Treasury General Account rebuild, and then it normally bounces back in quarter end. But we have both of those factors, and it's not bounced back because there's nothing to spend the money on because the government is suspended right now. So what you get is this weird pattern where there's no liquidity because they're not using stuff like the SFR, SLR, all of these other acronyms to inject money into the banking system. They're trying to get there. The Fed is cutting rates, but cutting rates doesn't really change liquidity. It changes financial conditions somewhat, but it doesn't change liquidity. So liquidity is kind of trapped in the US. And the US is quite dominant in liquidity because the dollar is the world's reserve currency. So this period of the government shutdown means that crypto's weak. Why is NASDAQ not weak and crypto is? Well, NASDAQ's been choppy. It's basically where it was when this whole period started. But crypto's weaker because crypto's further out the risk curve. There are no earnings in crypto, really. These are very long duration assets. So they are the most susceptible to liquidity. If liquidity withdraws, they fall the most. If liquidity comes in, they rise the most.
Raoul Pal believes Bitcoin's recent slowdown is only a temporary pause driven by tighter liquidity and halted government spending. He explains that once fiscal flows resume and liquidity returns, assets like Bitcoin will lead the rebound, just as they have in previous market cycles. This, he says, marks the calm before a powerful surge that could redefine the next stage of the crypto bull run. Pal predicts that as global liquidity expands and institutions re-enter the market, crypto's total valuation could soar toward $10 trillion. He calls this the beginning of a new wealth creation era led by digital asset. Do you think the next liquidity wave will trigger a historic crypto rally? Which asset do you believe will benefit the most from it? Share your thoughts in the comments.